It's earnings season on D Street once again, and IT giants TCS and Infosys will be the first ones to report their December quarter numbers on Thursday, Jan 11. Now the important questions are, what should you expect from these tech majors, or whether or not you should prepare for a negative surprise. Hi, I'm Meghna Chadha from ET Markets, and today we'll talk about the results preview of these two IT bellwethers and also the key things to watch out for. First, let's talk about Tata Consultancy Services. Now it's going to be another weak show for TCS as demand weakness intensified in the December quarter due to higher furloughs. Historically as well, Q3 or the December quarter is weak for the IT sector. But this time around, companies have likely witnessed a stronger winter chill. TCS is expected to report a mere 0.7% quarter-on-quarter rise in consolidated revenue to Rs 60,119 crore and only a 1% rise in profit to Rs 11,446 crore, according to the average estimate by 9 brokerages. On a year-on-year basis, the revenue is expected to rise 3.3% and the profit by 5.5%. In constant currency or CC terms, most analysts expect TCS to see flat or little over 1% growth in revenue sequentially. But a few brokerages also foresee a decline in revenue. Now the deal pipeline is likely to have remained strong, especially in the UK regions, but US and Europe may have seen a dip. Analyst estimates on earnings before interest and taxes or EBIT margins ranges between 23.1 to 26.7% compared to 24.3 a quarter ago and 24.5% a year ago. Coming to the key things to track now, the primary focus of D Street will be on client budgets for the year and whether or not TCS has started seeing any revival in spending. Now, since the last Fed meeting, Street has started factoring in rate cuts in 2024. In such a scenario, analysts expect the management to give a sense of spending by clients in North America as well as in the Europe and UK region. The Street will also keep a close eye on deal pipeline and discretionary spending trends. Now moving on to Infosys, Q3 numbers will probably be worse for Infosys as it is expected to report a drop in numbers across parameters. Analysts are expecting a 1.4 to 1.7% drop in constant currency revenue on a quarter-on-quarter basis. The consolidated revenue is likely to drop by 1% to Rs 38,641 crore and profit is likely seen 2.2% lower at 6,078 crore, according to the average estimate by 9 brokerages. On a YOY basis, the profit is likely to decline by nearly 8%, while the revenue may rise about just 1%. Now talking about the deal wins, though the overall deal wins are likely to have been steady, Infosys is expected to offer a conservative commentary on demand environment. This is particularly because of a large deal cancellation that the company saw in the last quarter. Last month, Infosys reported that a $1.5 billion deal that it signed with the global company got cancelled. Moving to FY24 guidance, despite a likely weak show, analysts widely expect Infosys to retain its revenue growth and margin guidance for the current fiscal year. Now, compared to TCS, Infosys is likely to see a sharper drop in profitability. Now, analysts expect EBIT margins to drop between 20 to 20.5%. Key things to track will be the outlook on deal pipeline and client spends this year and the strategy to regain business in the backdrop of attrition at senior management level. D Street will also seek more clarity on deal cancellation and its potential impact on revenues. Street will also track the demand environment in North America, Europe and the UK. Well, that's all in this video. Thank you for watching.